Welcome to Bar Charts Market and Close. I'm your host, John Rowland, Bar Charts Senior Market Strategist. The market is lifted out of bear territory and could be poised for a new bull run. A reflection on insider trading. There are many reasons to sell, but only one reason to buy. Gold continues to shine, but when will little brother silver have his moment in the sun? We'll make a case for $50 an ounce. And I recently closed out a trade that I want to share with you. And Thomas and I will discuss the perception versus reality. And hot off the presses, one market indicator has just fired off a potential 16% return in the next 6 months. All that and your questions, and to help me out with today's show is my co-host, Mr. X. Hello, Thomas.
Hello, John. How are you?
Ready, rock and roll. I know we've got a really jam-packed show today.
John, I feel like every time we take a week off, we come back and the world has changed and we've got just so many different topics, some bullish, some bearish to cover. So I'm excited to get to this today. Just a reminder for everybody watching on our website, if you want to ask a question, just click ask a question at the top right. You'll see it in the orange color. If you're watching on YouTube, just go ahead and ask those questions directly in the chat. We've been getting so many questions lately, John. Sometimes we don't have time to answer all of them, guys. We're going to try to get to as many as possible. If we don't, just go ahead and follow up with our support team, and they will get you an answer immediately. All right, John. So this week, finally, a relief for bulls, John. The markets have been on fire. In fact, I posted this on our Twitter account the other day. NASDAQ 100, John. Symbol IUXX on bar chart. Mega cap tech stocks, John, just posted 3 consecutive days of 2% plus gains. Last time that happened, John, 2001. So I think that speaks to the strength of the markets. But, John, there's kind of a lingering question right now because people don't want to get sucked in. John, is this just a bull trap of epic proportions, or could the market be headed for a sustained recovery?
Yeah, I don't, it's difficult to say right now in the moment if this is a bull trap or a bear rally or a beginning of a new bull thrust. But we talked about 2 weeks ago before we went away. We talked about that Mariposa, that controlling candle. So let me pull up my chart here. There we go. And that was this candle here. And what we said was this candle was going to be our controlling candle. In other words, we can't get bullish until we get above it, break above it, or we can't get bearish until it breaks below it. And so the 10 days inside of it, where the market kind of just whipsawed back and forth, even though we had up days, if you look at these candles from a open to close viewpoint, we had 7 of those 10 days had bearish sentiment, even though the market finished higher. So you get a lot of mixed signals. Now, there's no denying that the broader index is higher, or most of the broader indexes are. We're up about 10% from the lows. Today it looks like we're seeing an encouraging close above our Mariposa. But, I'm not ready to declare the bear dead. I think there are some obstacles in our way. So let's look at those really quickly. So first of all, we have this gap. And gaps are good levels of support or resistance. In this case, this is going to be resistance. Now, that gap is around 55.80. We still have a down-sloping 50-degree moving average. And that's around 56.30 today. Well, it's a little bit low now. It's 56.19. We're still below the 200-day moving average. What happens below the 200-day moving average, Thomas?
Nothing good, John. Nothing good.
Very good. And if we take a Fibonacci retracement from the dead low of this last spike low, the 61.8 retracement would put us in around 56.50, which is just below the 200-day. And that's typically where we see retracements in bear markets. Now, if I had something like the ADX, which is kind of a way to look at identifying trend, we're still, the ADX, which is the black line, is still way above 20. That's usually where Wells Fargo said that's what it would confirm a trend. And the pink line here is the negative DI, directional index, and that's the one that is the greater of the two versus the positive. So this is still telling us we're in a bear market, although when the DI falls below the ADX, that's usually an indication that you're having some changing conditions or you might be moving more towards a neutral position. Now, if I add Bollinger Bands, you know how I love Bollinger Bands. We did get a nice crossover of the mean, but, we can discount this a little bit by the fact that this comes from an extreme oversold condition. And a lot of times when you get to the extremes, not only will it snap back to the mean, but it'll rise to the outer band. But notice where the outer band is located. And so we have this confluence of a lot of resistance just above where we're at. So one of the other things that I like to look at in terms of confirming breakouts or confirming, these kind of types of moves, especially above our Mariposa here, would be is I want to see 1.5 times our ATR. Again, we can look at the 9 and the 14 and the 20, but 1.5 to 2 times is really kind of that confirming number. And if we do a 2 times ATR, that's going to bump us up against the 200-day moving average. So here's the bullish scenario. We're now above the Mariposa. We're now above this controlling candle. So, I want to see the market come up and test the 50-day or maybe even test the 200-day. And then I want to see the market come back. I want to see it draw back to, somewhere, around the mean, or maybe try to fill this little gap here. And then rally from there. To me, that would be a really bullish sign, because then what we would have a new high, and then we would also have a new higher low, which would be the conditions of a bull market. Now, what's interesting about this, Thomas, is I'm showing you this on the indexes, but you will see this candle or this collection of these candles in all the large major cap stocks. So you can use this analysis with those different individual stocks. Some of them, the price is still in the controlling candle. Some of them are out of it. Some of them actually falling below it. So you can use the methodology I just talked about here to help you decide if that's a stock you want to buy or sell, and also the dynamics and the conditions, or it's just a progression is a little bit different. So keep that in mind when you start looking at some of your individual stocks. The scenarios that you're going to see here might be similar in those stocks.
All right. Great stuff there, John. A lot of things to look forward to. John, I spend most of my time on social, and I came across the chart, which was interesting. Now, this is from Goldman Sachs. It points out that retail traders, John, have been buying the dip in the equity markets at the fastest pace in at least 12 months. Now, John, I like this, right? Because retail, they're often viewed as the opposite of smart money. But this chart actually shows the exact opposite, right? Prices came down. Retail said, hey, I think this represents a better value. I'm going to start to buy, and I'm going to add some exposure to the markets, which I think are oversold. So that's great. But, John, I also came across this. So insiders, smart money, right? Traditionally viewed as smart money. They are also buying. Okay. Now, this is John Hess, CEO of Hess Corp, also a board of director member for Goldman Sachs, John. He bought $2 million worth of Goldman Sachs shares. This is the largest Goldman Sachs insider buy in 17 years. So sometimes these are sort of token buys, John. This one is not a token buy. This has got some meat on it. So I'm curious kind of your thoughts here and whether this represents a good sign for bulls.
Yeah, that's one of the things we always talk about is there's a lot of reasons why somebody might sell a stock, right? Or an insider might sell a stock, but there's really only one reason why they buy, and that's because they believe that the stock is undervalued, or that they have some information they think that the stock is going to go up. So let me go to let's go to Goldman Sachs here. Just want to show you that if you folks aren't aware, is here I'm on the Goldman Sachs page, and if you scroll down here, it does say insider trading, and there it is, the John B. Hess. Right, he bought 3,900 shares for just under $2 million, and he paid $511. Now, I know that $2 million is, to you and me, it seems like a lot of money, but I think, the chairman of Hess is probably, maybe that might be walking around money. I think more interesting, I don't want to deviate from this, I just noticed this, is that David Solomon, the chairman and CEO, sold back in February, maybe not as many shares, but, around $622. So let's go to the chart here and let's look and see what he sees and maybe what we might see. And which is interesting is, Thomas, is that, we just looked at the S&P, right? Notice that we see the same, very similar type of chart with the same kinds of conditions. Here's that gap, right? Here we are, we're bumping up against the 200-day. We still have a down-sloping 50-day, right? If I added Bollinger Bands to this, right, we're now above the mean of the Bollinger Band. That breakout was right at the mean. That's a really good confluence of information. But, the outer band is just above the 50-day, and that 50-day and outer band, there's another little teeny gap right here. So again, there's wood to be chopped above, but we can look at this in terms of that ATR extension. Again, and if I look at I want to find that information, technical analysis, there we can see, the 9, 14, and 20-day, it's somewhere around, 23.80, 24.30. Let's, round up. Let's just say $24. So we want to see market move at least $48 or maybe like $45 above our breakout level. Again, we go back to our chart. It looks like our breakout level was around, 518, 519. So again, we need to see the market get above a lot of this short-term resistance. So again, I think what I would like to see in this one is I would like to see the market come up, test these numbers, pull back, fall back into that area where there's your 511. That's where Hess bought, and again, that's kind of the origin of this breakout, and it's also the mean of the Bollinger Band. So that would be what I would like to see, right? A new impulse high, drawback, new higher low. That would give me a lot of positive feelings about this particular stock. Now, the funny thing is about, as we were talking about bull markets, in our production meetings, I was saying, well, where's the leadership going to come from, right? Typically, you don't see leadership move, stay in one sector. Tech and AI and all that has been one of the strongest sectors of lately. Last year, 2 years ago, that's what really drove the market to all-time highs. But in old school bull markets, if you go back 10, 15, 25, 30 years, usually bull markets start with the financials. And so this is really another positive sign. If we start seeing strength in financials again, it's usually because they are the first ones to report earnings. But here's a big bank financial, right? And this could be a very good sign for us that there's a lot more positive to come.
All right. Love that, John. All right. So let's jump from the equity markets, John, to the futures markets. And we're going to do sort of a combo segment on gold and silver with a focus on silver. And here's why, John. So far this year, gold has just gone absolutely nuts. I think it recently hit an all-time high of 3,500. And as you can see in this chart, yes, silver is up on the year, but it's getting absolutely trounced by gold, John, in comparison. And silver bugs are rightfully asking the question, hey, I'm happy for these gold folks, but what about me, John? When is my time going to come? So when do you think the time is going to come for silver to finally catch gold?
Well, let's look at it. Let's try to make a case for it, right? I love to look at evidence. So here, let me pull up my chart here. So you're right. Gold has been up. Here's a gold chart, right? You did mention it just recently touched 3,500. This is the gold futures contract. According to the Wall Street Journal, it's up over 113% so far this decade, where the S&P is only up 78%. So gold is outperforming the stock market. And in the last 12 months, gold's up 41%, where silver's only up 23%, which is kind of the same chart that you showed. So when we start looking at silver, we have to think about silver. It serves two masters. It serves speculation, but it also there's that industrial use, right? Electronics and solar panels. So that might be one of the reasons why it might be being dragged down. But here's a chart that we created a while back, and this is called the gold silver ratio chart. This is where we just basically look at the price of gold versus the price of silver. And you can see over the last 25 years, the mean of the gold and silver ratio is somewhere between 70 and 75, that ratio. Now, when I was a floor trader back in, seems like horse and buggy times, it was really actually closer to like 65-50. So that's how much gold has outperformed silver over the last 3 decades or 4 decades. But in this point here, there are examples where we can see that where we get big spikes in the gold silver ratio, that within 12 months of that spike, when it comes back to normal, that we see the silver outperform. So here's some couple of statistics for you. After COVID, 12 months after following COVID, silver was up 73%, where gold was only up 8%. And after the GFC, silver was up 81%, where gold was up only 44%. So there is a precedence. So let me put the silver price on it. I didn't want to get you guys confused, but you can see there's a spike, right, in the gold silver ratio, and then you can see how silver performed as the ratio came down. Again, here's a spike, and you can see how silver performed as the ratio came down. So let's take that into consideration. Let's say that gold silver ratio falls back to 90, or falls back into this range. Well, let's just give it a very conservative 90 rating. So here's the numbers for you. So there are 3 scenarios what could happen, right, Thomas? One would be is that silver catches up to gold, right? The other is gold comes back to silver. And the third is that gold comes back a little bit and silver catches up. I think we're somewhere in between there. So if we look at an assumption, here's an assumption. Let's say gold pulls back a little bit, 3,300, 3,350, I used the number. Then the 90 gold silver ratio will put silver at 37.22. There it is up there. At 3,500, which is what our most recent peak, then that would put silver at 38.90. But at 3,500 and gold silver ratio coming back to 70, puts silver at $50. And if we look at silver in terms of historical levels, $50 is the all-time. So there is this case, if gold continues to make all-time highs and just kind of maintains a level around 3,500, and we see this dynamic shift or this catch-up of the silver market, there is this kind of case for silver to go to $50. Now, I think that is all predicated on the dollar. So let's do this. Here's the dollar. And we've been kind of watching this for right, Thomas? We've been watching this. And there's been a lot of weakness in the dollar, right? I mean, as folks have been, well, how would you classify it, Thomas, right?
Nervous. Yeah.
Nervousness, right?
I mean, I'm nervous, John. I love to travel. Everybody knows that. I'm watching my travel purchasing power just kind of fall through the ground.
Right. A lot of money has been in equities, right? U.S. equities. So money's coming out of the equities market, right? A lot of weakness in the dollar, right? And a lot of uncertainty about the dollar. So we broke through this 100 level, which I think was a very significant level. And, we kind of fall back to where I drew out these 2 little demand zones. And they're kind of stacked on top of each other. But anyways, to split the difference of the 2 of them, it comes in around 97.60, 97.50, So, we got really close to that. And now we're kind of holding here. But you can definitely see that there's going to be resistance here to get the dollar back above 100. Now, if we break below, let's say 97.50, then I think we could talk about the low end of this range would be around 90. what's my number here? 96, 95, 20-ish. That would be the lower end. But let's look at this again. Remember we talked about when we get volatility or when we start moving into new territory, price territories, it's always good to take a look back. Now, this is a weekly chart, but let's look at this over, like the last, 15 years. What we really see here is dollars been in this channel. And what we just recently did was we test the upper end of the channel. Now we're testing the bottom end of the channel. And you can see where that support level is. It's right about where we bounced off. So, again, they never call it tricky Dixie for any reason, because the dollar, every time you think you got it figured out, it goes ahead and does the opposite on you. But I would say that if we broke below 96.50, Thomas, here, we broke out of this channel to the downside, then the next level of support I see is around 93.25, 91.80-ish area. And so the case here is, if you want $50 silver, you got to see a sub $96.
John, one of our contributors, Darren Newsom, he wrote an article, and his idea was that you could see gold continue to surge for a little while, and when it finally tops out, you could see a rotation of capital from gold into silver, and hopefully chasing that next commodity boom. And it really got me thinking, John, because I've seen something very similar happen over multiple cycles in the crypto world, where you see Bitcoin, kind of the safe haven, right? Bitcoin is the safe haven, if you want to call it that, in the crypto world. And when Bitcoin looks like it's going to lose some steam, John, people sell Bitcoin and they buy other assets like Ethereum, like a Solana, like a Cardano. And those then get that big sort of steam powerful move. Do you think that could play out here, John, with silver?
I don't think it's restricted to commodities or even like crypto. Think about the semiconductor sector, right? Nvidia was the one that was the monster that ran away from the market, and then what happened, right? Well, we said, well, if Nvidia is going to make money, well, then TSM and ASML and even Intel got a pump from Nvidia. So I mean, this is a market mechanics, or actually a market behavior, where you get a very strong leadership from one single asset or one single stock that kind of carries the market, and it drags everybody along with it, right? That rising tide lifts all boats. So I don't think it's restricted just to those. I think it's just more of a market dynamic. So yeah, I think there's a lot of precedents for this. The thing though, I think for gold and silver and for commodities across the board, is really what's going to happen with the dollar. If the dollar gets back above 100 and gets back into that channel range, then all bets are off, right?
John, we got a question that's related here. You're not suggesting that somebody pair trades and goes short gold and goes long silver with the same sort of capital allocation, correct?
I think if you wanted to play the gold silver ratio, I think that would be exactly what you would want to do. You just have to realize, though, that the beta, I think, in silver is a lot larger than it is in gold. Although I think in recent weeks, I think gold beta has really gotten crazy. Sometimes what I do is, when I was in the GLD, if I felt the GLD had topped, actually, then, and I didn't want to get out of my GLD, what I would do was buy silver puts because I just know that there's a lot more downside reaction to a down commodities market. So that's a little opposite of what the question is. But, if you want to play the gold silver ratio, that would be the way to do it.
All right, John. So let's jump back to equities. We're going to follow up, John, on one of your picks, which came very recently, and that was Las Vegas Sands. John, I think we got a question from one of our users. If you could sort of provide an update, what are you thinking with Las Vegas Sands right now?
Yeah, here's the chart of Las Vegas Sands, and I just remind everybody the trade we had. I had a $45 put, and what I was looking for was, it was for a May expiration. And, I knew earnings was coming up between now and the May expiration, but I had a target here around below $34. And so the market fell below $34. I got to my target before my time limit for the options. So I I kind of was feeling like, maybe I should ring the register on this one. And then as earnings came out this week, I think it was on Tuesday, it came out after the bell. The earnings actually were kind of disappointing the way I looked at it. Revenue was down, capacity was down. They had some segments of their properties, let's say in Singapore, was doing well, but Macau was kind of flat to down. Vegas was flat to down. So, but the market rallied from it. So I was like, I was pretty happy with the result of the trade, and I covered my puts, made a nice little profit on it, and I took a very small piece of that profit and put on a roll. Another rolled it forward. So I did the 37.50, 27.50 put spread. The other one was I was just long the puts. This here is more of a controlled risk, in a very small position. So again, to remind you, my thesis was that Vegas has a lot of competition now with, online gambling, DraftKings and all these, you can literally bet on your couch. And that really the draw for Vegas would be as an entertainment value, a resort idea. And, I was kind of thinking also that we looked at like the middle consumer, the low end consumer is a little bit tapped out. Now the high end consumer probably still able to afford travel. But the thesis is like, hey, maybe what we're going to see is that demand for, Las Vegas as an entertainment competition wise is a lot greater. And so that maybe that we might see a decline in their revenues. But Thomas, you got another story to tell me because you went out there and you did a little research for us. And what did you find out?
Yeah, the weather here in Chicago, John, it was getting a bit cold, so I was craving some of that desert heat. So I booked a kind of a spontaneous trip to Vegas. And I talked about this, John. I'm not a gambler at all, so you'll never find me in a Las Vegas casino. But I do enjoy the weather. I enjoy the entertainment value, the dining. John, it was packed. My flight was full to Vegas. The city was full. The strip was full. Oddly enough, John, the quietest part was the hotel. I stayed at the Wynn. John, we talked about this before I left. We actually thought the Wynn was going to be the most crowded part, but actually, John, the city was booming. People were there. They were enjoying themselves. And this was a Sunday to a Friday. It's not the busiest time of the week for Vegas by far, but it was packed, John. So I don't know.
Yeah, I was
People
teasing
they haven't given up on Vegas yet.
Thomas talked me up. He came back and he was like, "You're so wrong. It's so wrong. It's so busy there. It's crazy." And I was like, "Oh crap!" So you basically talked me out of my position.
Right.
But I'm happy that it worked. The trade worked out. And then if anybody had been following a trade, just want to kind of update you where we're at. But again, you look at this. There's a lot of similarities to what we just saw in the other two charts. But this one, the dynamic is we're not getting above some of those significant levels of resistance. And after 2 days of up trading, after the earnings report, finally we had a little bit of a down day. So let's see what happens in this one. And I bought like September puts spread, so I have a lot of time on this one. We'll watch this one over the period of the summer. We'll see.
All right, John. So we have a bonus segment for you guys today, and the reason we're going to do a bonus segment, this was going viral yesterday, John. A lot of different people talking about it, and it is called the Zweig Market Breadth Thrust Indicator. I know that's a mouthful, guys, but John, this triggered for only the 17th time in history. So, okay, that's cool, right? But here's the remarkable part of this, John. The previous 16 times have resulted in an S&P 500 average gain of 16% after 6 months and 24% after 12 months. That's amazing. But here's something even more amazing, John. The S&P 500 has never been red. Never been red 6 months and 12 months following the trigger of this indicator. John, I did okay at math, John, but this seems like it's pretty good odds for bulls. What say you?
Well, I mean, this is kind of another piece of evidence of what we've talked about in the first two segments. So let me just kind of give you some methodology on Martin Zweig's this tool. So what he's talking about here is he's looking at advanced decline volume, and what he wants to see is where we go from a very oversold or extreme condition, um, a lot of negative advanced decline, a lot more declines than advances, and then in a very short time, a very compressed time, within 10 trading days or 2 weeks, we want to see go from poor to good or to great, actually, and see a lot of advances versus decline, which is what we saw over. We looked at just look at the chart. We said since the Mariposa that we had 10 trading days, the market is higher, and so the advanced decline has done much better. So there's EMA in there and a moving average and all that stuff. So that's the indicator. But he does have two other conditions. And one of the conditions is that he wants to see a 9-to-1 up day. What does that mean? Well, he wants to see a 9 times more stocks advancing than down days. Now, there is a way we can kind of show that. Obviously, that was probably the Mariposa day. I mean, that was a huge up day. But if you go into our stock momentum page, and I believe it's here. Yes. I can scroll down. These are some unique symbols, and a lot of folks might not even know that these exist. So here is a total advanced decline. Let's see. Where is it? Here, advanced decline volume difference. Yes. I think that's the one I want. Yep. Okay, let's open that one up. Yeah, there it is. Right? We went from, look at this over like history, right? We're talking about extreme decline to extreme advance, right? So there you can see it out there. That was a Mariposa day. The other thing he wants to see is that the value line index, which is really an index of a lot more stocks, he wants to see that increase by 4% week over week, close over close. And so here's the value line index. This is symbol S, a $ VLA. And this is a weekly chart, and you can see where we closed last week and where we're closing today. It's right there, 4%. So all three of these are the conditions that he wants to see. So again, let's think about this in a caveat, right? This doesn't mean we're going to run into the market and start buying everything. What he's saying is that there's a bull impulse, and that a lot of times in bull markets, that first impulse, that first momentum is usually the greatest. But again, just like when we looked at those setups, we're not going to just go right from here straight up to all-time highs. We're probably going to get some kind of a drawback or some kind of a small correction where we make a lower high. So there is time. But let's look at the numbers, and let's say around the S&P is around 5,400, I think is the number, 5,500. A 16% gain puts us around, if I did the numbers right in my head, I think that puts us around 6,280, 6,300, which would put us at an all-time high in 6 months. So just keep that in mind. All right, Thomas?
It's been a tough couple months, John, for people in the market. So this indicator really caught my attention because it gives hope. I mean, I think it's really some strong hope, some strong indications for bulls. So I think it's a promising way, John, to wrap up today's show. But John, we're not done yet because I've seen quite a few questions come in. Are you ready to have some fun with that?
All right, be kind to me.
All right. So John, the first question, guys, this was sent in ahead of time. So if you guys have if you guys have a detailed question that requires us to do a bit of legwork, you're welcome to send those into marketonclose@barchart.com so John and I can take a look at them. So John, this first question, it comes from Jay, longtime viewer. Thanks for coming, Jay. It's about Trend Seeker, John. So he pointed out that the Trend Seeker was beginning to show a series of dots, but with a series of red dots above. And what he says is, John, when he sees a string of green dots emerge, that seems bullish as long as the price stays above the green line. But what does it mean when you see a series of red dots above?
Yeah, let me pull up the indicators so we know what we're looking at. Okay, so under ad indicators, this is a overlay. This is our trend seeker. This is kind of it's a combination of a lot of different things: momentum, volatility. It's a proprietary tool that we have, and I think I saw it. It was it Tesla, or was it AT&T? Let me just double check here. I think I set it up. I can't remember which one I saw it in. Let me see. Okay, yeah, good. AT&T. All right. So the question is when we see dots above and below. So let's just talk about what these dots represent. So in an uptrend, you're going to see green dots, and the green dots are going to be below the market. In other words, think of it like a moving average. And what this tells us is that as long as price stays above these green dots, we're in an uptrend. When price gets below, now we're not talking about a piercing or an intraday low. We're talking about a close. When it closes below, right there. Let me do this. Let me see if I can get it 3 months here. Right there. So when it closes below, which would have been on this candle here, then that's telling you that that uptrend is over, or at least all of that momentum and that volatility is over. And then at that point, what happens is the trend seeker resets. In other words, it's waiting to determine a new trend. And you will start to see dots above and below price. You're going to see red dots above and green dots below. And then the theory behind it is when price gets above the red dots, closes above the red dots, that is now a signal that a new uptrend is in place. Now, again, you can see where it fell below and it basically stopped you out here. And then you've got both green and red dots. Now, notice how the green and red dots are starting to come together, right? Volatility is starting to get narrower. And then price closed below the green dots, right? That is now an indication of a new downtrend. And so that's why you only see red dots. So when you see two layers of dots, greens and blue, greens and reds, it just means the market is in a transition or a reset, how you define it, and that you need price to get above the reds for green, go, or below the greens, red, sell. Does that make sense, Thomas?
Yeah, I think I'm with you on that one, John.
Okay.
John, would you use bar charts top stocks to build any sort of watch list for things you might want to get an entry into?
Yeah, I do use it. But I check out a webinar I did a couple of years ago. I think now it's about how to use top stocks, and I have a unique way of looking at this. What I kind of do is, you might be too young for this, but do you remember America's Top 40, right? Casey Kasem,
Oh
right?
yeah.
Remember how you used to always say like, oh, this track was numbered, rising 13 places from last week, right? Or falling, right? So what I like to do is I like to come here and I like to find those that are just coming on the list. Like you can see, like one that says NA means it wasn't on the top 100 last week. And where does it fall? And I like to find those that are rising in the list opposed to those that are falling, and then I will make a watch list of those. Usually I like to find also ones that are in a sector that I'm interested in or I believe is the one that's going to outperform. So for instance, let's see if I'm just going to give you, again, this is not a recommendation, but let's see if I can find a good riser here. So I mean, here's one. Here's one of my favorite stocks.
Yeah.
MicroStrategy. Last week it was 83. This week it's 64. So it's, as Casey would say, it's up 19 spots and rising. So yeah, I do use this, and that's how way I can use it.
John, we are coming up on May. We're gonna hit May end of next week. There's an old adage, John: sell in May and go away. Would you take that advice this year, or do you feel like the market's in sort of a different place where you wouldn't be as comfortable with this old adage?
You know, you got to take all these adages with a grain of salt. I mean, we've done Santa Claus Rally, we've done, the first week in January sets the tone for the year, and all that kind of thing. So you got to take them with a little bit of a grain of salt. There is some truth to it in terms of historical aspects. Usually, when June rolled around, in the old days, stockbrokers are started moving out to the Hamptons and they're on summer vacation. So that was kind of how it was created. They didn't really, there was not a lot of new capital committed to the markets during the summertime because they were all out there enjoying, the sun and the surf. I would take that advice this year because I really do believe that there's still a lot of uncertainty in the market, right? And certainly a lot of uncertainty about tariffs, about regulations, about taxes, about the dollar. We're coming into next week. We get a lot of earnings next week. Apple, Amazon, just Facebook, Meta, I think is next week as well. So, let's see what the guidance is, for the summer. So yeah, I probably this year I would do that. But again, if we get this thrust up and then this correction, then maybe sometime in the middle of the summer, that's when we're going to make that new higher low, and that might be that opportunity that we've been looking for.
John, are you seeing any signs of capital rotation into certain sectors? In other words, are there any sectors that you're feeling really good about adding some exposure right now?
Well, we just talked about financials have been one of the stronger sectors for a while now, and they did take a little bit on the chin but everybody did of recent. But you can come into, I believe it's in market performance, yes, and you can come in here and look at the different sectors. So let's say from about the beginning of the year, here's the S&P. What are the best sectors? Now, again, not great results. They're all basically zero. But materials, consumer staples, and what is that? Utilities or real estate, which is surprises. But again, these are negative numbers. So I would be watching this one. Let's look at it from, when was the low? 10 days ago. So let's look at it from that aspect, right? Well, we're all kind of in the same boat here, but who's kind of rallying here? Consumer communication services, energy, healthcare. Yeah, again, I thought biotech was going to be one of the leadership ones. Where's financials? Financials are kind of right in here. So yeah, I would look for some kind of leadership on this page. This is a really great page to do that.
John, we got a question. I'll take this one real quick. So the question is, could you explain the difference between unusual options and options flow, and which one do you like better? So unusual option activity is about a specific option with a specific expiration date and a specific strike. It tells you if something is out of the ordinary. Options flow, John, it's kind of like we've given you a bird's eye view of a stock, and it allows you to take a quick look at all the activity taking place in that name. Which one do you like better? I mean, it's kind of a personal preference. I actually use unusual options more, John, because it alerts me to a very specific option. And then what I'll do is once I get alerted to that, I'll go into the options flow just to sort of get a comprehensive view and see if, I want to make a trade or if I sort of want to sit on the sidelines.
Yeah, exactly. That's exactly how I do. I look at for the unusual option, and then I look at the flow and see if I can dissect what is going on. So, because you might only see that unusual options trade might be only one side or one leg of a multi-leg trade, or somebody is rolling in or rolling out. And the other thing I always would do is always look at, for instance, here's Tesla, is I'll look at the put call ratio as well. Now, Tesla's not a great example to do this because this is one of the most highest volume options ones there is. But when you're looking at unusual options, usually is in a low volume kind of environment. What I'll look for is if there's some standouts, expiration standouts in terms of a large amount of volume and open interest. And that might tell me a little bit better story on the flow. So yeah, I do it exactly the same as you do.
John, what's a good silver ETF? I mean, personally, I just stick with SLV just because it has.
Yeah, I mean, I don't really trade them, to be honest with you. I mean, I kind of just watch this one. I know that if you go into ETFs, under ETF Finder, you can go through here and then, you can look up, right? So there's a couple there.
John, we got a question from Cam. Cam is he's new to the market, and Cam follows us on X. Thanks, Cam. Appreciate that. Here's his question, John. He's been wanting to add exposure to Mag 7, but he felt that the market was going to go even lower than it did, and this is something that a lot of people struggle with, myself included. And now with this week, he feels like he's too late, so he doesn't want to buy now after seeing these huge green days. What advice do you have for Cam, John? Should he buy smaller portions, maybe DCA smaller amounts? What should he do?
Well, first of all, Cam, you're absolutely right. This is one of the how I want to put this very delicately. One of the aspects or characteristics of novice type traders is they kind of, that herd mentality, they kind of chase the market, and that's not what we want to do. We want to be patient. So Cam, pick your values, wait patiently, look for the market to come back to you. But if you have this FOMO feeling, or you feel that you want to get into the market, then, wait for those setups like we just looked for, wait for those conditions that show strength. And then again, I think what Thomas says, maybe only buy a very small portion of your risk asset profile. But again, you're actually thinking smartly in terms of, I know the market has made a big impulse thrust. That's what I want, but I'm going to wait patiently for that little drawback or that small correction. And that's really what institutional traders do.
John, we got a question highlighting that there's always a lot of volume in the last hour of the trading day. And the question is that volume coming from smart money or some sort of combination between everybody? What do you think is going on there?
Well, there's the old adage is that novices open the market and professionals close the market. And I'll leave it at that.
That's actually how we came up with the name on the show, I believe, right, John? Market.
Yeah.
All right. Longtime viewer, Wayne, it's a statement, not a question, John. He says that gold has something silver doesn't, which is global central bank purchases. And on that, Wayne is absolutely correct.
Yes.
Let's see.
I saw a question about natural gas. I want to just approach that one too. Yeah. Again, I try to give you guys the best insight that I can. I got it wrong. I really got it wrong. But to my defense, in natural gas, I didn't think China would stop importing LNG for 60 days, and now it's going closer to 90 days. That's something I didn't think. I didn't think that U.S. production in natural gas would go to an all-time high. I thought it was going to maintain or actually drift off during the summer. Am I still bullish on natural gas? Yeah, I'm still very mega bullish on natural gas. And especially if we do see crude oil prices starting to fall. We talked about this 2 weeks ago, that fracked gas wells lose 60% of the production within a year. So the drillers need to maintain drilling to maintain production. So we looked at $60 for a crude well. Well, below, let's say, below $3 or $3.20, or I think the number is like $2.85-ish. So that's kind of what we're getting closer to in natural gas. That's where you're going to start seeing capital expenditures or E&P. So in a very short period of time, you're going to see a rebalancing of production and the price of natural gas. But I got it wrong. I didn't think it was going to fall below 350. But I do believe that this 280, if I go to the spot contract, I do believe that this 285-ish area, maybe on the downside 265, is the near-term bottom. But again, remember what futures markets are, right? They're telling us a very unique story. And yes, the May contract is very cheap. That's because we're at the end of the season. There's some inventory still left around, right? It's kind of like Labor Day weekend and the T-shirt shop at the beach is discounting flip-flops. But look at the price of natural gas going out 6 months to a year. You've got $4 gas. So I'm still very bullish on gas.
One comment, and we'll take one more question, John, and wrap it up. Guys, we have so many questions. We can't really do multiple questions from the same person. So, think of your best question, send that in. I wish we had time, but John and I would be here until 8:00 if we took 3 and 4 questions.
I don't want to be here until 8:00.
All right, John. So the
I
final
love you
question,
guys. Not
the
that
final
much.
question is going to be on one of your favorite stocks, John, and this is Tesla. Tesla has been on a huge run this week. Today was a monster move. John, do you want to maybe do a quick TA on that and we'll see what you're thinking?
Yeah, I'll just do my regular analysis. I usually start at a weekly. Let's get just a regular template here. Yeah, I found a nice little level of support. Looks like we've already identified. Now we're back above a old resistance support level. Now we're back above that, so that's very strong. Let's look at our ADX, see what it's telling us. Is there a confirmed trend? No, we're kind of getting a neutral. Let's look at this at a daily level, right? Still got to get above a couple of these numbers here, although we do see a crossover in the ADX, which is a positive sign. But Wells Wilder will tell you that the DI crossover, that's a positive sign. But Wells Wilder will tell you that you need to get the ADX above 20. So again, positive momentum, but not a confirmation as of yet. Let's look at our Bollinger Bands. I'm just curious what's going on there. And right, kind of in sideways, right? Sideways. Again, I would be looking for our bands to expand out, right? We might just kind of bounce around in this band, right? So where would I look for a breakout? Well, again, my ATR is around $20, $21. So if I'm looking for a confirmation out of this range of price, right? So 20, you're talking about $50. So that's back above here. So there you go.
All right. Fantastic, John. Great job today.
Thanks, Thomas. All right, folks. I appreciate all you folks being here. I hope you guys got something out of today's session. Thomas, thanks for the tips about Vegas. Next time, keep them to yourself. No, I'm just kidding, buddy. Until next time, folks. Best of health. Manage your risk. And the good of all trading.